whether the company is falling under the baseline marketing or distribution has to be seen and whether it qualifies. If it qualifies, then obviously the analysis can be changed in that way. But that is something which has to be taken into consideration. So 2025 is more from a compliance point of view, and 2026 is more from a planning point of view, right? And in this slide only, we have just given just an overview for your reference as to how we are helping clients in conducting different kind of elements and different kind of activities to take into consideration and to cater to these ever growing amount developments and amendments. So this is just for your ready reference. So we do have another 10 minutes. So any questions from anyone, please feel free to put in the chat box. uh, any questions we might be able to take into all till the time we have. If not, we can definitely discuss offline. So I can see one question which is from Mabel Wong. Can you please explain more in IRS indicative margin? Thank you. So okay. So thank you, Mabel, for the question. So IRS indicative margin primarily means that the IRS for each financial year, they publish certain base reference and indicative margin rates for companies whose principal loan amount is less than 15 million, 15. So this depends upon per loan transaction. It's not that if you have 10 loans, you can add all of them. It depends on each loan. So if you have, for example, a loan of maybe 5 million principal loan amount, so they have given these base reference rates on their website for each financial year, wherein using a specific base reference rate, which are generally called or generally known as either your SORA, the overnight reference rate, or other different reference rates. One can use that plus a certain indicative margin, which is kind of a markup, which is added to the base reference rates, and that can be chosen as an indicative arm's length price interest rate for determining the interest rate margin for your loan transaction. So you choose one base reference rate, then for that particular financial year, you choose that indicative margin, which is basically the markup or a margin, which has to be added to the reference rate. So it will be X plus a certain markup or a margin, and the ultimate number which comes as a result can be used as an arm's length interest rate for your intercompany loan transactions. But obviously, uh, the methodology has to be followed, has to properly apply the indicative margin, but that is only for companies whose principal loan amount is less than 15 million. The moment you cross 15 million, the indicative margin rates cannot be used. Then there has to be a proper database analysis. So this is a way how indicative margin rates. So if you just go to the IRS website, you can very easily find the indicative margins. So they have to be applied obviously in a proper way. So that is something which we can advise you, but this is the way how it works. And obviously it's again a welcome sign for the companies who have very small loans transactions. They can use these indicative margin rate, but that's purely an optional case for the company to choose. If it wants to have a proper analysis for interest rate, that also can be done. I hope that answers your question. Any further queries on the amendments or the key takeaways which we have just explained, or the SSA? Anything on the documentation requirements, or any on questions on the transactions, financial, non-financial, or on the SSA, or what is to be done for 2025 or 2026? Okay, so if no further questions from anyone, that's okay. If you have further questions, if not now, maybe after this webinar, you can please reach out to myself or our team from PKF Singapore. We can definitely take all those questions offline. So if no other further questions, then I would like to thank all of you on behalf of myself and my team at PKF Singapore for taking out time for today's webinar. And as a concluding remark from our end, again, would be to ensure that A, financial year 2025 documentations need to be prepared by November this year, whether it's a full-fledged version or a simplified version. Uh, More focus would be on a simplified version because now it has to be properly dated as compared to the full-fledged version, which was obviously being always dated. And apart from that, if you are having financial transactions or any other transactions which are not having a proper commercial substance, they need to be very carefully analyzed before we conclude that whether they are at arm's length or not. On the SSA point of view, if you are having baseline marketing or distribution, uh, please immediately do analyze those transactions so that, and we can definitely help assist you on those to advise you whether you are actually qualifying on the SSA or not, because these are again evolving with the uh, OECD BEPS 2.0. And B, related to this, the OECD BEPS 2.2 Pillar 2 program for the Singapore entities whose the M&E group is falling under the ambit of Pillar 2. The Singapore entities have to do a certain registration for Pillar 2 and filing requirements by June and July this year. So the deadlines are quite uh, tight for both Pillar 2, and that's why this SSA approach has also been introduced from this year onwards so that it can be coinciding with the Pillar 2 program. So please do uh, come back to us and let us know if you are having or you think you are qualifying for the SSA for 2026 or Pillar 2. And for 2025, obviously, depending upon the thresholds, whether you are applying for whether you have to prepare a full version or a simplified version, we can assist you on that perspective. And yes, I have one question. So yes, the presentation will be shared everybody for reference or along with the recording of the webinar also. So fine, if no further questions from anyone, thank you once again. Thank you for your time. For any further queries or assistance, please do reach out to us. And thank you once again. And we hope to see all of you in the next subsequent webinars, which also we will be conducting in the maybe I think the next webinar will be in the month of March. We still need to evaluate on the topic, but again, that will be again one of the most relevant topics for transfer pricing and maybe some other elements involved. So we hope to see you all of you at that point also. So thank you once again and have a nice day ahead.